What's the point of money if you can't spend it?
The point of this money is to grow this money. This is like a seed, a starter money. Are you eager to explore the world of ETFs?
I am so eager.
What is an ETF?
Exchangeable traded fund.
Oh my God, you remembered. I told her to look that up last night and she didn't look that up until today. But you remembered. I'm so proud of you. Do you have any idea why I would have suggested you look that up or become familiar with it?
Because that's what you want to teach me about and give me knowledge on.
Yes and no. I just feel that it's a low enough risk for you, somebody who doesn't have really any knowledge of how to pick a stock, how to read the company financials to know if a stock is truly valued at what it's at. An exchange traded fund, an ETF, is managed by somebody else. They do all the work for you and you get the benefits. So it's like you've invested in a mall rather than a store in the mall. The mall has multiple different companies and businesses. Well, an ETF, you're invested in lots of different stocks. So you have Coca-Cola, you have Pepsi, you have Amazon, you have, name a company that's probably publicly traded.
Walmart.
There you go. So somebody does all the work and figures out the balance within that portfolio. If a company starts to not do so well, they decide to unload some of that stock, pick up somebody else that's doing better, just to maintain profits. So they do the work for you. All you're doing is buying into it's like a pie that somebody else has got all sliced up and they did all the work for you. Does that make sense?
It does.
Okay. So we moved $500 into your account and you can see that you've already made 98 cents without even investing. And at this point, we're going to see about going and getting you an ETF. Did you look at any of the ETFs that were available?
Coca-Cola.
That is a stock.
Oh.
That is a business. But I feel for you, just starting off, since I've kind of done the homework and I'm guiding you at the moment, we're going to go with the Vanguard 500 Index Fund.
Not as cool as Coca-Cola.
But Coca-Cola's within it. The only trade-off is Coca-Cola has, and I'm not looking, but I would say like a 3% return or 4% return on that particular stock. And this is a safer, lower risk, so this might be closer to a 2% return, which means you're not going to get as much money as quickly because it's low risk. The riskier something is, the higher your returns will be because you're gambling.
I'm a gambler, yeah. You go in.
Well, let's start off with an ETF. So for today, we're just going to purchase some of VOO. It's a safe enough one for you, popular one enough that I feel it will be a good start into dipping your toes into the water. Okay. Do you see how much one share costs?
$407.86. Oh, wait, no.
$408.
Yeah.
And 6 cents.
I was reading the thing below.
Yeah. We are literally going to buy just one singular share.
It looks like that's all I can afford.
Yes. Some places will allow you to do what's called fractional share trading, where you can, like, oh, I have $2. I'm going to give you $2 to purchase a fraction. But right now, we're just going to place an order. When the market does open back up, which, by the way, the market's already closed as we're recording this because it is the day before the 4th of July. The market's closed early, and they will be closed tomorrow for the holiday.
Fun.
But when they open up on Wednesday, you will have purchased a VOO ETF, the Vanguard 500 Index Fund. Yay! You know what? Let me allow you to do the honor of pressing the button for place order. Oh, are you nervous? Are you nervous?
So nervous. I'm gonna be broke and never see this money again.
If the stock market goes down, then you will have lost money, my dear.
Oh, thanks, Mom.
I promise you, it's actually not as scary as it sounds. You only lose money if you sell when the market is down. The whole point of this right now is you are just going to be making purchases. We won't even be introducing any sell orders for a long time. So, what kind of questions do you have?
What are the minimum requirements it takes for you to sell? Like how many years?
So, you could sell the same day, but you really don't want to do that because anything you sell for a profit, you pay taxes on that profit. And because if you have sold it before you've owned it for a year, you pay what we call short-term gains. The tax rate's higher. If you hold on to something for over a year and then sell it for a profit, you pay long-term gains. It's a lower percentage rate. Two things certain in life, death and taxes. So you will be paying taxes no matter what. And as long as you're not selling what you've purchased for a loss, which it's possible to do, but it's not very likely, as long as when you're making your purchases, you're investing in solid companies. Any company can go out of business. Any company can have hard times. But for the most part, as we are beginning, we'll stay away from riskier investments. We'll go with companies that have smaller returns. So you're going to see if you can purchase Coca-Cola.
Yeah.
Do you remember the stock symbol for it?
No.
It's KO. I don't know why it's KO, but it is.
Should be CO.
I'm sure something is CO or was CO. Do you have enough money left over from your beginning balance?
Yes, I do.
So how many shares can you purchase of Coca-Cola?
Like 1 point something.
So we're going to buy
$4.
The whole thing?
What else am I gonna buy? I like Coca-Cola.
There's a whole bunch of other companies.
Nope, I like Coca-Cola.
We get diversified. My whole point of this channel is to help educate you. Ha ha ha. You made a mistake.
No! How could you? Which one did I mess up on?
Well, what is the error report telling you? You could buy 1 share. Do you feel brave?
I feel brave. I wanted to go for the whole, all in.
A whole enchilada?
Yeah.
All right. You've purchased an ETF within your portfolio. You have purchased a specific sector of the market, 1 singular share of Coca-Cola.
Yeah.
I think our next video should be talking about being a diversified portfolio and the reason we are diversified.
All right, that sounds like a good idea.
Does it?
Yeah.
You made me a little like a risky investor here, making some questionable market decisions.
I love Coca-Cola. I buy Coca-Cola, so it's like makes sense. I'm gonna get my money back.
But what if all of a sudden the news report came out tomorrow that Coca-Cola only makes you grow to the height of 5'4" inches? Anything over that, you'll be gypped.
Disproven because I'm 5'7".
But what if all of a sudden that's like the new, like, oh no, where are you going?
I'm standing up, 5'7". Not true.
Well, the point is we'll talk about being diversified in the next video and understanding the importance of it. I'm just glad you looked up what ETF meant and you were able to repeat that. I was super impressed on that part. Okay, well, this was super exciting.
Super exciting.
You're now an actual investor within your portfolio, making your money grow for you. So
I'm ready to be rich. go.
Do you think next week, do you think that you will have grown in value or decreased in value?
Decrease.
I know you don't pay attention to what the stock market does on a daily.
Decrease because I just spent like $500.
Well, you still have $500. You're now a small business owner, if you will.
Gotcha. Then increase. I have faith in Coca-Cola.
You have faith in the American economy? You think people are going to keep going out and spending their money and making profits for Coca-Cola?
Yeah.
And for the rest of the companies?
I know I will. Everybody else just follows.
Yo, you're an influencer, huh? A trendsetter.
Ready.
Nice. All right. Well, thank you so much for watching our video. We hope that you enjoy the content that we're putting out. And next time we put out a video, we'll talk about being diversified.
Yay.
Yay.
Yay. I don't plan on growing old, like to like grandma and grandpa's retirement levels. I don't know who's this money's gonna benefit.
Oh Lord. Okay. So
They're gonna be old and in a tragic, like, or scuba diving. A shark's gonna get me.
there's a musical group called Train. It's talking about all the ways to die, but it's because the guy's telling a breakup story, and rather than just say he got dumped,
Oh yeah, I saw that.
he talks about how she tragically died.
She got hit by a train. She
Run over by a purple Zion
Yeah.
or something. Oh, Scion, not a Zion. Okay, we're recording.
Okay.
That'll go on our bloopers.